Well, we have made it to the final week of August. Want to bring you the latest data here in the Austin metro area. Well, is Austin still a boomtown, or have we started to fade into the rearview mirror? Well, guess what, folks? We are still number one. Austin just ranked number one on Lending Tree's latest report as the number one boomtown in America. Well, what got us on that list again? We were number one on their list back when they did the survey or their report in 2019 to 2021. We were the number one boomtown in that area. This now is the 2022 to 2024 window, where, of course, the housing market's cooled off. But guess what? We are still the highest GDP growth in the country of 14.6%. What does that mean? That means we are attracting lots of companies to move here, and we continue to have lots of jobs. We also had one of the highest increases in housing units. That's construction, that's supply. We added 9.4% more housing to the market in that window, and that's the third highest in the country. That, to me, is number one why the housing market and the rental market have had to cool off, is when you add a ton of supply to the market, it takes time to absorb all that new housing. All those apartments have to get rented. All those homes have to get sold. And that has cooled off the market in terms of price when it comes to sales price or rent price. But what's going to eventually fill all that up is population growth. And we're still in the top 12 in the country of fastest growing metros. 5.1% more population moved here in just those 3 years. So 1 out of every 20 residents in Austin moved here in the last 2-3 years. And they are relocating, about 20% of them are relocating from outside the metro. So they're not just moving around. So here's kind of a map of where these fastest growing metros are according to the study. Obviously, Austin here in Texas. We got Denver and Colorado Springs. We got Nashville, Charleston, and everything else is in Florida. So despite all the headlines of the hurricanes chasing people out or high insurance rates, Florida is still booming. Now, a lot of it is Central Florida. Maybe people are moving in from the coasts to get away from the hurricanes, but Florida is still making up half of this list. All right, well, not only are we a boom town, but we are also, we just got named a fourth best city for renters in 2025. So Rent Cafe, they follow the rental market. They found that we are a great market for renters. We are in the top 5. Round Rock was in the top 10, which is our largest suburb. And essentially they're saying, hey, based on quality of life, our economy, the cost of living. One thing I found interesting in this study is it mentioned that Austin was 2.7% lower than the national average on cost of living. So, you give us 3 years of a downturn and all of a sudden Austin's back to being more affordable than average again. So I think that's kind of some, I'll say some tailwinds coming our way in the future. Is even though Austin's had to deal with all this rise in supply, the tailwind is we still have a lot of population growth. And now the prices have come down and rents have come down. You're seeing Austin get back onto that affordability list again. So you mix in population and affordability. I think Austin has some nice tailwinds to come. All right, so what's happening in the market as we speak? This is the last week of August. We are still, again, trending, in my opinion, into a buyer's market. I think 4 months of inventory feels a little more balanced to people. As we tilt closer to 6 months of inventory, it's gonna feel a little more like a buyer's market. It's gonna take the average home 2 to 4 months to get that contract and get sold. If we look down here on supply, this is just kind of your annual bell curve. And I've shown this chart many times, but the gray is the 10-year average. That's how much average supply we typically have in the market on housing. We're basically double, and we're well above where we were last year. In 2023, we had about 10,000 homes for sale. In 2024, we had 12,900 homes for sale. Now we have 15,000 homes for sale. So we have still almost 5,000 more homes for sale than we did just a few years ago. And if you look back at the pandemic, we had like 3,900 for sale. So we're 5-6x how many homes we had for sale during the pandemic. But you can see that bell curve. We're starting to peak off and head down into the typical fall ease where we have fewer sellers, fewer buyers heading into the fall. Demand, again, below average, but it ticked up a little bit in July, which was nice, but still a little below average. I'll show that data here to you in a second. All right, so this is going to be a chart where we talk about original price versus sold price. Now, this is not per house. This is just kind of market. Where did the market start and where are buyers buying per month? So if we look at the spring, that's going to be this gap here. You can see there's bigger gaps between the price and the closed sales. Why is that? Well, typically sellers are going to ask more money in the spring. There's kind of the expectation of price growth in the spring, and there usually is price growth. If I look at the blues, in January, our median home price was 404. By April, it was 446. And so typically we do see buyers pay a little more. Maybe they get in a little more competition with buyers in the spring. That all ends typically around May. We get into the summer, it slows down. And then we see the sellers as a market typically start to lower those prices again. So you get a little more price reduction activity, and the buyers are pretty even. If I go back to March, our median home price was 433. If I go to July, it was 433. So the price that buyers are paying isn't necessarily moving all that much. It's really buyers are seeing those list prices move. They're seeing the prices come down, and that's typically sellers having to get a little closer to where the buyers want to make offers. Again, if we look back at the summer, 525 was the peak. Now we're down to 485. So we've seen the average list prices coming down 30 or 40,000. The actual sold prices are pretty in line with each other. And that's the part a lot of people don't see is sold price. So I pay attention to that original median. We're getting a little tighter between list price and sold price. If I look at the number of listings, just pure listings and sales, you can see we peaked for the year back in May and June. Now we're starting to see fewer listings. We're seeing those sales happen. How many sales are happening per month? Well, as of July, it was about 2,700 a month. And we have about 14, almost 15,000 homes for sale right now. So again, do that math. There's that 5-6 months of inventory. That means about 1 out of every 6 sellers, typically, maybe 5, 1 out of every 5 is going to get a contract this month. And if they don't get a contract, then 80% of them are going to go to next month, and they'll add up with the new listings that hit the market, although there won't be as many new listings. And of course, they'll be looking, hopefully, for those 1 out of 5 buyers again. That's going to happen. Here's what's going to change over the next 2.5 months. So, well, I want to add this one before I say that. So mortgage rates. So if you look at the 30-year fix now, we're about 6.5%. So where were we when we started the summer? This is a chart that starts in May and up till today. So if I go back in May, we were climbing, rates were going up, and we went above 7% again in late May. So as we started the summer, we were like at 7%. Since then, remember, the Fed has made no announcements. This has nothing to do with the Fed. This has to do with the bond market. Since then, we've seen a general easing in the bond market, which has also lowered mortgage rates a full 0.5%. So now we're down to 6.5%. On average, a really good credit buyer putting a good amount of money down is going to get an even lower interest rate. So pay attention to that. Even without the Fed making any announcements, we've seen interest rates come down at least 0.5 point. That is good news as we head into the fall. So what's going to happen for the next 2.5 months? So we typically have 2 markets. We got the spring market, which is, as you can imagine, all the sellers come into the market. You got all the buyers come into the market. Everybody wants a house for the summer. And that's typically what really picks up that spring market. That's why you see so many listings hit the market, and you see the buyers typically buying more homes per month all the way up until about May. Well, if you didn't buy a house for the summer, well, when's the next time you want to get a house? Typically before the end of the year. So we're going to call that the fall market. It's not as busy as the spring market, but we do have a fall market. So if for all my sellers and everybody that's been working over the summer, there's not a lot of rush. Nobody's really in a big hurry to buy a house in July or August. But what starts to happen is now everybody's back in town. School's in, all the kids are here. And if you do want a house this year, well, you got to start your search sometime, and they're starting right now. So we're starting to feel the pickup We're picking up more clients. We're getting more people out the door looking at properties. We felt a pickup this week on our listings is, again, everybody's back in town. So we're seeing a few more showings a week. Well, now your goal as a buyer is to probably buy a house before the end of the year, which really means you're going to be writing contracts sometime between now and mid-November. Because if you write in November, you're going to close in December, and you probably want to write before Thanksgiving. So what we're going to see is the next 2.5 months is what I call the fall market. And that's typically where we're going to see a little more pickup in activity. So as sellers, your time is now. We want to get that buyer between now and early November so that we can get that property sold this year. If you are a buyer, expect a little more traffic than we saw during the summer. It doesn't mean there's more sales, but I do expect we're going to see a little more traffic as we head into the fall. And if rates continue to come down, that's going to spur some more buyers into the market. So pay attention to that. Anyways, I hope this was helpful. If you want to follow our videos each and every week, make sure to go to our YouTube channel at Ryan Kelly Group. Click that subscribe button. We want to add up some. I'm getting closer to 200. Doesn't sound like a lot, but it's a lot for me. But anyways, hope you follow that channel there. And of course, if you know anybody looking to buy, sell, invest, or finance here in Austin, would love the opportunity to talk with them. Well, it's finally game week. Texas plays Ohio State this weekend. Hope you'll be watching, and I'll bring you the next video next Monday. Thanks.